Welcome to Bloomberg ETF IQ. I'm Scarlett Fu.
And I'm Katie Greifeld. And Scarlett Fu, did you know what DeepSeek was before this morning?
Well, I'm learning, and we're all getting a crash course in it.
We're all learning very quickly. So let's get to the biggest stories right now in the more than $15 trillion global ETF industry. And as we mentioned, Chinese startup DeepSeek sparks a global tech sell-off as its new model has investors questioning the high valuations of AI-related companies.
So we're going to discuss the implications of market volatility in just moments with Alison Hennessy. She is head of ETP listings at Nasdaq.
And you also see Bitcoin selling off today. So we'll speak with David Dziekanski of Quantify Funds, which recently launched a Bitcoin and gold ETF. Neither are working today, so looking forward to that conversation. But as always, Eric Balchunas from Bloomberg Intelligence here with us now, looking at the flows. Eric, what do you got?
Katie, Scarlett, thank you very much. Look, the flows are more of the same. Now, these flows are as of Friday, so it didn't really take into account the sell-off from today. But let's look at VU. I mean, this is ridiculous. VU is basically showing off at this point. It's taken in $20 billion this year. That is 5 times more than any other ETF. And that's over $1 billion a day. Ridiculous. And it's basically about $7 billion away from toppling SPY and being the biggest ETF, and that will probably last decades. So that's something we're watching in my world here. And then the Qs, inflows here. I would bet some comes out after today. You know, the Qs got hit a little harder today. We got growth here. TLT, this money got rewarded because TLT is up today. IBIT with more flows there. So again, beta with a side of Bitcoin is still the trend as of Friday. We'll see if that changes. Let's look at the outflows. A ton out of SPY, but I still think this is a lot of tax loss harvesting. Some money out of gold, probably kicking themselves today, XLE, energy. So a little bit on the outflow side, but net, people still doing the same thing as last year. Now let's look at the ETFs today. I like to look at these 5 ETFs. Anytime there's a sell-off, I look at these 5. I can tell you the whole weather picture from these 5 ETFs. Q's down 3%, SPY down 2%, so clearly high beta is worse than the beta itself. And then IBIT down a lot. Now, IBIT is a risk asset. It's behaving like one still. And TLT up. Okay, so that's a typical sell-off day. Gold down a little bit, but the volume is not bad. ETF volume tends to be like the VIX. The more volume, the more people are freaking out. So the volume's pretty minimal. That usually means, Katie, that this sell-off won't last that long, but we'll see.
All right, Eric, thank you. And let's keep the conversation going on the weather forecast with Alison Hennessy. She is head of ETP listings over at the Nasdaq. Great to see you in studio.
Yeah, thanks for having me.
So let's pick up on what Eric was talking about, volume. When you see a sell-off like this, you usually see a big increase in trading volume, and we're certainly seeing that at the index level. But give us the roadmap on how ETF trading typically behaves in a moment like this one.
Yeah, I very much agree with what Eric was saying, especially with some of those large liquid index-based products that he had on screen. As he said, we do tend to see elevated ETF volumes during periods of elevated volatility because traders and retail investors even are looking to ETFs for that price transparency and those macro trading vehicles. So I think with this elevated volatility, we would expect those volumes to continue.
And we've seen, of course, a big couple of months, big 2024 when it comes to listings of ETFs and ETPs. To what extent does market volatility, and I know that one day doesn't make a trend, slow down filing, slow down the whole, the whole machinery of ETFs?
Yeah, I think when it comes to the filings, I don't think it really delays the filing plans that issuers might have at all. I think issuers are still hungry and excited to get these products in front of the SEC and ultimately launch them in the market. So could they impact maybe specific days of when they launch? Perhaps. But again, with general ETF launches, it takes a couple of months for an ETF to come to market. So ultimately, I think issuers just, want to make sure they are prepared, for when they are looking to launch all these different types of products.
So again, on filings, last time you were on the show, you broke some news for us, which we always love. Okay. Yeah. You said that the Bitcoin IBIT options were most likely going to be approved and trade the next day, and they did. So thank you. Now you guys have filed to have in-kind creation redemptions on IBIT. This is new, but now with the new SEC, people think this will be allowed. What's the timeline on that? What can we expect there? And why is that important?
Sure. So not much we can say at this point because it is, a public active filing. But the SEC does have a full 240 days to review these exchange rule filings. So, the engagement with the new administration will continue. But why is this important? We continue to engage with issuers like BlackRock or others that are continuing to think about how they can make their products, the best trading, and investment vehicles for all types of investors. And so ultimately, this is something that BlackRock is looking to move forward with. And so, we will continue to support them with that.
Now, doesn't it seem like Pandora's box has been opened? Because yes, you guys are filing for in-kind, but then we saw over 40 crypto ETF filings since Gary Gensler left and got in his car in the parking lot and drove off. That's a week, including the Trump coin ETF, the Dogecoin ETF, something called Bonk. I'm having to Google half this stuff, to be honest with you. How crazy is it going to get?
I think maybe a different word instead of crazy is creative and innovative by these issuers, right? It's very interesting. Again, with this new administration coming in, these issuers are thinking about what are the best and newest types of products, right, that they can launch for investors. We've already seen, the Bitcoin and the Ethereum products, very successfully come to market. Nasdaq has now filed for a Litecoin ETF. I think we'll also see some issuers, already filing for multi-coin portfolios, so not just a single coin product. And then to your point, some of these products with other types of, more nuanced, smaller coins. So again, I think these issuers are trying to respond to what they're hearing from their end investors. And again, I think it will be a very interesting 2025 and beyond. I don't think these filings or product plans are going to slow down.
So a little bit of a feeding frenzy is what we're describing here, but filings is one thing. Actually, listing is another thing. What's the percentage of the filings that actually make it all the way through to listing?
That's a great question, Scarlett. I do imagine there's some amount of filings maybe that do get, caught up, or again, these issuers ultimately don't launch them. But I think from what we've seen, what's most important for the exchange is as long as the SEC has deemed these products, appropriate in meeting their, listing rules, us, at Nasdaq as a SRO, a self-regulatory organization, we want to be prepared to, help launch and support, all types of these ETFs through our liquidity programs, the marketing support we provide, and the data and analytics that come with our platform. So it's, we always look at the diverse types of products and diverse issuers that we're seeing bring these products to market. Again, I think the trends that we saw in 2024, like active ETFs, crypto, options-based products, some utilizing the Nasdaq 100, and we're celebrating a big anniversary this week. I think these trends will certainly continue.
Well, happy birthday to the Nasdaq 140, right?
40 years.
Wow, that's a long time.
Middle-aged.
Yeah, middle-aged.
Middle-aged.
Hopefully,
it's a big one for sure. Again, it's a transparent rules-based index, and so we've really seen this index, do very well and combat lots of dynamic market conditions. But it's been really exciting, even from an ETF standpoint. There are actually now over 90 ETFs in 20 countries over 6 continents that are, providing exposure to the Nasdaq 100 in some variety. Of course, we have the very well-established QQQ, over $300 billion, to talk about a liquid, well-utilized trading vehicle for investors. But it really spans beyond that. So the Nasdaq 100 has definitely taken on a global brand of both product innovation and, tech-focused thinking, but I think also around market resiliency.
Well, I hope today isn't the actual birthday, because if
Friday.
So, okay, well, we'll see what the market that we're in
sure
is
it'll
by
be up.
Friday. Right now, it's down 3%, so that's pretty rough. But I want to talk a little bit more about what specific preparations you're putting in place for this new administration. As we've been talking about, there's a lot of optimism out there about the new SEC chair, Paul Atkins, what might be permitted under his administration, his leadership, that maybe we wouldn't have gotten in the Gensler era. What does that look like from a business planning perspective from your point? Are you staffing up more? Are you increasing other capabilities? What does that look like on your end?
Yeah, I think for us, within our ETF business, we're obviously very, well engaged with all different, varieties of areas of Nasdaq, particularly, within our, Office of General Counsel and their, close relationships with the SEC. So certainly even prior to, January 20th, a lot of discussions going on of, how we want to feel, particularly, ready for this new administration. So I think it's more about like prioritizing properly of, the topics and priorities that we want to speak, with the SEC about. Crypto is certainly a big piece of that discussion, and it's important for us to also speak with our close partners, some of which are ETF issuers, on their points of view and how the new administration can impact their new product plans. So again, for us, it's continuing to develop these close relationships with the SEC, but also speaking as an advocate for the some of these large global asset managers that we work with.
So one of the things we're looking at is private assets, private credit, private equity being put into the ETF wrapper. Spider Apollo is the big one. Everybody's watching to see if it'll come out. I think it's going to get approved and be on the market this year. Nate Geraci says it will not. We bet a steak dinner on it. Who do you think will win?
Oh boy, you versus Nate. Yeah, it's a good question. I know there's still a lot of back and forth on that product. I may pivot a little bit, Eric, and say more broadly. I think the space in general, the private credit space, and even private equity, I think will continue to evolve this year. There were certainly some whispers in 2024. Bond Blocks actually launched one of the first private credit ETFs on Nasdaq. In November of 2024. Also, there's a new private equity ETF that came to market. So again, I just think if you want to use the term just creativity and innovation, ETF people love innovation, I think are continuing to expand on what the ETF definition and wrapper can really stand for. And I think private credit will definitely be a part of that.
I think Eric wanted
that
to
sounds pretty good. I think she's on my side. She can't say for sure, but I'll take that as a yes.
Yeah.
Reading between
you can take it as
the
a
lines
yes.
there. Okay, perfect. Well, that's a good place to leave it. Always great to see you, Alison. Really appreciate you being a good sport there. That is Alison Hennessy of Nasdaq. Now, coming up, we'll dig further into this sell-off as Monday surprises some traders with AI concerns. This is ETF IQ on Bloomberg. Welcome back to Bloomberg ETF IQ. I'm Katie Greifeld. Time now for the ETF brief, where I walk you through the trends and the stories that caught my eye in the ETF industry. And we start with the sell-off, of course, that's ripping its way through big tech, ripping its way through the levered ETF complex. You're taking a look at TQQQ right here. Of course, that is leveraged inverse exposure on the Nasdaq 100, or long rather, and that's adding up to a lot of pain. Currently down about 9%, but it's even worse if you take a look down the list at some of those more specific bets, such as Soxol. Of course, that is semiconductor industry. We have a long NVIDIA, 2 times long NVIDIA, currently off by more than 31%, and then we have MicroStrategy also getting in on the selling action, currently off by about 10%. So we'll continue to keep an eye on that. But let's talk about Vanguard, because we are on watch for a sea change. Of course, VU, in terms of total assets, it's getting very close to dethroning SPY, which is hard to do. And this chart helps explain why VU is so close. You're taking a look at its annual flow record, and VU, in its existence, has never posted an annual outflow. 2024 was a record and then some, but you can see that momentum has continued in 2025 as well. But let's get back to the sell-off, because it's so exciting to talk about. And there's a lot of investors who made a lot of mistimed bets, if you want to call it that. You're taking a look at SMH here. This is a VanEck semiconductor ETF. It took in $1 billion last week, Scarlett. That is the most it's seen in quite a long time. And a lot of those investors, I would imagine, feeling the pain today.
Well, if they're looking at it today and they're marking to market today, definitely. Let's talk about this more with Bloomberg's Emily Grafeo. And Emily, you've been tracking some of these leveraged ETFs, looking at the most actively traded ETFs by value, and certainly anything tied to the chip sector is right up there.
Yeah, SMH, which is the VanEck semiconductor ETF, is down about 10% today, but a lot of those leveraged ETFs are getting crushed. I wrote specifically about QLD, which is from ProShares, and it goes 2x QQQ, and it had seen its best week of inflows on record. So this fund has existed for over 20 years, and just last week, traders decided, let's just pile in at the fastest pace ever, put over $840 million into the fund. They're getting crushed today. It was not a great bet for them, but maybe if they hold on.
That's the thing. You have to wonder, I mean, how long their investment horizon is. With a lot of these leveraged, highly leveraged funds, it's very short, so we'll have to continue to watch flows there. But we were talking about TQQQ, which is long exposure. What are we seeing on the short side of some of these tech bets?
So that was actually SQQQ, which is short. It goes short QQQ 3x. So it's 3x the inverse of the Nasdaq 100. It had its best week of inflows in 2025 last week. So at least those traders, it's kind of a mixed bag with these leveraged ETFs.
They probably knew what DeepSeek was.
Maybe they did, and they sensed that tech was going to fall. So that stock is, or that ETF is up pretty big today on that bet.
So this is just a reminder as well that these leveraged ETFs are meant to be not meant to be buy and hold securities, right? Like you buy them, you trade them like minute by minute, and you're going in and going out very quickly.
That's right. So sometimes it's hard to tell like what investors at large are saying about the market, and what the ETF flows can tell us about market sentiment, because like you said, a lot of these leverage flows, it's just big institutional traders getting in and out. But we also have written some stories at Bloomberg News about how retail traders do like these funds. So it is important that they understand on days like today, you can really underperform the market, because if you're short tech, then you're going to be down much more than tech today.
I think they call it getting your face ripped off. I've heard it's a technical term, but I've heard that one.
What are the parameters around that? I think it shifts, right?
Just look at the screen.
Yeah, there you go. Bloomberg's Emily Grafeo, thank you so much. Emily Grafeo covering cross assets for us here at Bloomberg. Still ahead on ETF IQ as crypto gets hit by DeepSeek concern. We speak to David Dziekanski of Quantify Funds on his Bitcoin and gold ETF next. That's a combined ETF. This is ETF IQ. This is Bloomberg ETF IQ. I'm Scarlett Fu along with Katie Greifeld.
And Eric Balchunas from Bloomberg Intelligence here with us now for today's drill down, where we focus on one ETF. Eric, what do you got?
Katie, today we have an interesting one. This is the Bitcoin and gold ETF. Bitcoin and gold are kind of like at each other's throats all the time. They're fighting for the same audience, right? Who's the better store of value? This ETF's like, hey, why fight? Why don't you use both? And we'll serve up both at 200% leverage. So basically it's 100% Bitcoin and 100% gold. It uses futures to do this. So it's a kind of an institutional trade, but made democratized for retail. You can see here that it is 1% fee, so a little pricey. It came out in October. It's got 24 million. And this is part of that return stack trend that we've seen some success with in other products. Let's look at the holdings of this. And you're going to see very clearly that there's going to be some ETFs in here and some futures, but obviously you're going to get gold and Bitcoin together at 200%. So let's look at the performance over the past month, and you'll kind of see how this all plays out. So if you have BTGD here, it's up 16.5%. This is Bitcoin, and this is gold. So if you add them together, you kind of get this. So that's generally the idea here, Katie, is just making it easy for you. The question is, how many people want both?
Well, that's the thing. Eric, thank you. Let's ask that question now to David Dziekanski. He is the CEO and CIO over at Quantify Funds. David, great to have you in person. I get the pitch for Bitcoin. I get the pitch for gold. What is the pitch for putting them both together?
Absolutely. Thank you for having me. So in the process of combining these two assets together, the idea was to offer a 2-for-1 currency debasement hedge in one package. These are two assets that are both considered scarcity assets that people invest often as protection against a devaluation of currencies around the world. They also have correlation benefits between the two, so stacking makes a lot of sense, and the rebalance between those two stacks offer a lot of potential value for the clients over the long run, and alleviates the need for clients to really rebalance traditional leverage ETFs in their portfolios, and a lot of that is done, packaged in this ETF for them, and it's a lot easier to hold for what we like to say is leverage for the long run.
I look at the performance today, and BTGD is down 7.1%. So it's not doing much of anything in terms of providing any kind of protection. So when is it going to be effective if you can't count on it to kind of counteract each other?
Of course, both Bitcoin and gold offer longer term protection as a scarcity asset, but not necessarily on a day-to-day basis. We've seen gold be much more of a protective asset since the election. That obviously is not the case today. Everything is kind of getting washed out with the bathwater in this kind of market. But whether it's an inflationary environment or a deflationary environment, all roads really lead to printing from the Fed. And that's where this comes in, whether it's, again, an inflation hedge or a deflation hedge. The way our system gets out of that is by printing more currencies, and you can't print more gold, and you can't print more Bitcoin. Bitcoin mines at about 86 basis points a year. Gold mines at about 1.75% a year. Paper currencies print at about 7 to 9%.
So this idea of return stacking in the institutional world is called portable alpha.
Yeah.
The idea here is you could take this to somebody, and instead of saying, oh, you need to have something in your portfolio you sell for GLD and something you sell for IBIT,
yeah,
you can take up less real estate. They can keep their beta and all that because that's been tough, right?
Yeah.
Is to get someone to get you basically claw out their VOO. Yeah. Here you can do two things with one shot. Is that the general idea?
Absolutely. The whole portable alpha or stacking space is meant to almost offer portfolio level margin for advisors, which is really difficult to get across a client book with margin rates being exceptionally high and differing per clients. So here you get margin through futures, which is the most cost-effective form of margin. And this alleviates the need to choose between selling Bitcoin or gold. It gives you more space in your portfolio for potential alternatives. We see people using this next to market neutral or managed future strategies. This, again, lets you to manage a strategy where you might have 110, 115% exposure overall in your portfolio, which we know that's how institutions actually manage their portfolios.
So we have about a minute left with you, and I'm glad you brought up advisors because I was wondering who the audience for this is. If you think about more traditional markets, multi-asset funds tend not to attract too much, given that the narrative is that advisors like to do that themselves rather than buy it in a package. If that's the case, how do you pitch this to advisors? Does that logic not apply to what we're talking about here?
We think this is applicable to both retail and to advisors. Advisors have shied away from traditional leverage ETFs, oftentimes because of the compliance issues of coming with a daily warning use written all over the prospectus. Because there's such diversification benefits between these two, that doesn't happen with this ETF. There is no daily use warning. So legally, it's a lot easier for them to actually consider it. So we think that it actually is an asset class that the whole leverage space that advisors would want to allocate to in their portfolio, but it's kind of a compliance nightmare unless you actually are capable of having an ETF that by prospectus can be held for more than one day.
All right, David, great to get some time with you. That, of course, is David Dziekanski of Quantify Chaos. And you can read all about this drill down, plus the latest in the ETF industry, when you subscribe to my weekly ETF IQ newsletter. If you can't read that URL at the bottom, it's bloomberg.com/ETF IQ newsletter. And that does it for this week's edition of Bloomberg ETF IQ, the TV show. I'm Katie Greifeld, along with Scarlett Fu and Eric Balchunas, and this is Bloomberg.